Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, September 10th. The year's 2024. Let's talk trading. Flip-flop boxes at the edge with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And just a reminder, no matter what method you're using, make sure your risk management is in place. Never lose more than you're willing to lose on any one single trade. Walmal, we had some questions out in YouTube land where the traders want to know or want some examples about where to enter and exit with the flip-flop boxes.
Okay. Well, it's real simple. Enter the line, as you used to say all the time. You go and draw the flip-flop box in the screen, whether you're doing it manually or you use, an indicator to do it. And then what you do is you just, for your entry, you take the trade, as it crosses the line out of that flip-flop box. Okay, that's the simple answer. Here's the part that gets a little bit more, I don't want to say complicated, but just a little bit more nuanced. There's probably a better way of saying it. Look to your left. Okay, are you taking a trade into an area that's been like a battleground, in the past? If you are, maybe that's not the best place to go and do it. You don't want to go and take a trade into an area. You want to take a trade out of an area. And what I mean by that is you always, if you set up your chart where it's, black and white candles on a white background, you want to go and make sure that you're trading into the white area on the chart. Whether it's an extension or whether it's or it's a reversal. And I trade flip-flop box, either way. I think originally the idea was to trade it as a reversal trade, but I found that it works both ways. But you want to be trading into an area where there's room for the trade to go, or room for the candle to grow, as I like to go and say, without having to go and fight its way through it. Now, the advantage of that, it just seems to me to be a little bit safer of a trade to go do that. You get less engaged in, the possibility of being cut up. So a lot of people will complain that, hey, this type of trade is going to cut you up. You're right. If you go and you trade, it's sort of like you had mentioned yesterday that, the idea that trade, when you look at charts spend 70% of their time in consolidation and 30% of the time in traveling someplace. Well, yeah, and the thing is, if you're going to go and take a trade into that area where it's consolidating, accumulating, or whatever you want to call it, okay, well, the problem is it's going to get into the area where it's going to go back and forth on you, and the next thing you know, you're either getting in and getting out, getting in and getting out, and you're not making any profit and maybe taking some losses in that area. Well, it would be better if you could go and find a place where the flip-flop box happens to line up on what I like to call an edge. In other words, if it crosses this area and goes into the white area above it or below it, it now is able to extend and it has room to go and drive into that direction. That's what I like to do. And by doing that, you won't get cut up still? Sure. That's trading. You have winning trades, you have losing trades. It's like today I've had 9 trades, and I had 2 trades go against me. 7 that went in my direction, and that's pretty good shooting as far as I'm concerned. It's just that it's just like trying to eliminate the idea of going into an area where you're going to have problems. Now there are areas where you don't know there's going to be problems, but there are also areas where there are going to be problems, or there's a high probability it's going to be problems. And what I mean by this, the old guys used to go and say all the time, right? And support turns into resistance, and resistance turns into support. Well, if I'm trading into one of those areas, what they call support or resistance, what is that telling me? It tells me that a lot of times if I'm trading into that area, it's going to turn around and come back the other direction. Well, use that to your advantage, knowing that that's a possibility. How about we just don't trade into those areas. Let's look for a flip-flop box that maybe occurs in that area and then goes and leaves the area. Because that's, you look on a chart, that's where you go and you have the possibility of making some pips. That's a possibility where you can actually, go and make a run. And that's what you're looking for.
Yeah.
Hopefully that made sense there. And if not, ask me questions to nail it down.
Yeah. Well, I don't know. I would assume you're looking at the pound right now because I guess candle. Let's see, 1, 2, 3, 4. Candle 4 came out of a flip flop box to the north, and there was an opportunity to make about 4 pips. And then
Right.
candle 1 just came out of a flip flop box to the south, and you could have picked up 2 pips or still be in the trade.
Right.
Now
I would
3.
Yeah. See, that trade, the first trade that you talked about, I would have gotten out. If I took that trade, I would have taken my 3 pips or so, or 4 pips, whatever it came out to, and just gotten out. This trade here, I would have stuck it, taken the chance, because if you look, there's not much below it. However, I do have some, long-term demand in that area, so there is a possibility you could turn around, knowing that there is long-term demand in that area. But at the same time, there's nothing recent that I would really conflate against. So, let's take a chance. Could I win? Could I lose? Yeah. I could do either one.
Right, because one of the questions was where to enter and exit for profit or stop loss. And I think, in the past, 6, 7 minutes here that we've been doing this video, I mean, there was an opportunity to take 4 pips to the north. So let's just say maybe you took 3, and there was an opportunity to take 3 pips here to the south. Let's just say you took 2. Well, there's 5 pips.
Yeah. You can live. You can go and live like a king on 5 pips.
Yeah, but I think there's just so many traders who I'm not really sure how to describe it, but they're not willing to just take those pips. See, now, because you said you would have stuck this one out, you'd be up 5 pips. We're making new lows for the day, and we only have a 50 pip range. So that's one of the things where it's like, well, hey, you know what? Even though the ranges have been low, there's a chance we extend this range.
Yeah, and the thing is, we had 75 pips yesterday, 129 or 130 on Friday, and we have 0 news today, but we do have news coming tomorrow, I believe. So, it's one of those things where, there's a little bit of room to grow here. So, go and try to get, I personally would try to get five pips on this trade. Would I have gotten it? Maybe, maybe not, but, that would have been my goal. That would have been my goal anyway.
Right.
And that's the thing too, Giro, that this is part of the art of doing this, because there's science to this, and that's statistics, but there's also art to it. And the art form that's here is by looking at the chart and saying, okay, statistically, I should be able to get more because we only got 50 pips on range on a day. I'm at the low of the day, and it could, statistically, you would think that it would drop more, because even as compressed as these days have been, we're still in only the 15th percentile. Well, here's the thing, though. If market is setting itself up, doesn't know what to do, it's going back and forth, get out. You got 4 or 5 pips, get out. Make it, because that's where traders get into trouble so many times, is that, they're not looking and watching the price action of what's actually happening. If statistically we're 15th percentile, yeah, that tells you it probably should drop more. But the problem is, it's going to drop more now, or it's going to drop more an hour from now. I say take your pips now, and if it's going to drop again in an hour, look for the trade in an hour, and take advantage of that. But stack the pips in the bank is all I'm saying.
Right. Now, another trader said something It was when we did the market, what the market teaches, part two. And he said, I goes, so the example that Walmal gave was that of using an EMA. But now I wonder if he's only looking at the EMA. They are basically four possible combinations. The EMA itself can point up or down, and the price can be either above it or below it. I wonder whether that's already enough to know whether I should exit right now, should choose a smaller stop loss of 5 pips or maybe of 3 pips. You get my point? Maybe you could show how you're doing it with any or no indicator at all in as many examples as you differentiate yourself. Thanks a lot in advance.
Okay, that's a a loaded question to a certain extent, and I don't mean that in a mean way, in any way, shape, or form. But again, it comes down to that whole thing of art, and what I mean by that is that I use the EMA not as something that says, okay, I'm crossing the EMA, time to get out. That's a hard stop, get out. Okay, I'm not looking at it like the EMA being like a period at the end of the sentence. No, I look at the EMA as something that's giving me an idea about what's going on. And the EMA 5 in particular, obviously the thing that gives you the freshest news about what's going on is the actual candlestick that you're looking at. In other words, candle 0. But what EMA 5 does for you, it tells you what has been going on in the very recent past. In other words, in the last couple of candles, what has happened? Is the market turning now to go in the other direction, or is it not? Now, the advantage of that is that it's sort of like, okay, if let's say I'm in a short and the EMA is turning to go up, starting to trend up a little bit, that's giving me an indication, hey, we may still be in this downtrend or whatever you want to call it, okay, or price moving down, but it's starting to turn the other direction. So how do I use it? I look at the slope of those indicated 2 dots, or I look at the actual EMA 5. If I draw the line on the chart, and I'm looking at that slope and looking at it from the perspective of not the slope between candle 1 and candle 0, but let's say candle 5 to candle 0, and has that slope changed? If I'm in a short trade and that slope is now bottoming out or starting to go up, and I start to say to myself, okay, it's time to think about getting out of the trade here. Doesn't mean I go and hit the exit button. It means that my radar's up. That, hey, this may be coming to an end, or it may be starting to accumulate. One or the other could be happening. I don't know which. Now, if I'm in a situation where I'm up, with a significant number of pips, and and I've made goal for the day, I may go and wait a little bit longer. If I'm in a situation where, okay, I need this to go and make my core for the day, okay, and this trade, if I get out now, puts me in that situation. You know what I'm doing? I'm getting out. I'm just going to get out because I've got what I need to get for the day, and the slope of the EMA 5 is starting to go against me a little bit. You know what? This could just be, again, like I said, some type of accumulation, and it's going to fall off it's going to fall off the shelf. But then again, it could also mean that, hey, it's getting ready to go and rocket the other direction. So.
Yeah, and you know what? The fastest 15 minutes in trading is just about over. But I think we might be seeing what you're talking about right here as indicator 2, aka EMA 5, just like flip-flopped colors. It went from magenta to aqua back to magenta on candle
Exactly.
0. So that might be giving you an indication, hey, things could change.
Yeah, I mean, if you look at it right now, I know we don't have time, but indicator 2 is starting to flip flop back and forth. We get higher highs and higher lows, and if I was short here, it may tell me it's time to start thinking about getting out.
Yeah.
I was probably kidding.
And we're at